Well, with a strong rally kicking off the first trading day of 2012, we've got a market analyst who can tell you what to expect all the way through the end of the year.
Wayne Kaufman is the chief market analyst at John Thomas Financial. You must have some crystal ball, Wayne. I mean, you're going to tell us what's going to happen for the whole year?
You know, all analysts have crystal balls. Some are better than others. Yeah. I'm positive on the first 6-8 weeks of this year. Especially we have earnings coming up, and I'm hopeful it'll be a decent earnings season. The key issue here is that earnings estimates for 2012 have been coming down slightly since August, about 4.5% in aggregate. If that changes here, because over the last couple of months we've seen better than expected economic news. Today from China is another example. We've seen it here in the States a lot. So if these analysts who have been bringing down the estimates, if they do a reversal and have not taken into account the better-than-expected news that has come out recently, then we could see a move up.
And these announcements are certainly giving cheer to the market, Wayne, but we still have Europe, of course, hanging out there. The European Commission meeting at the end of this month to try and get the financial house in order. But let's face it, Spain today saying its deficit now is a lot worse than they just predicted last Friday. It gets worse by the day. That is still a concern, isn't it?
It's a very big concern, and that's one of the reasons why I'm concerned about February and March. The last 3 quarters, investors have been happy to buy stocks when there's a catalyst of earnings season. But as we've made our way through earnings season, they haven't wanted to hold on to the stocks. Stocks have sold off thereafter. So I'm worried about that repeating in early to mid-February.
You started this interview by saying for the first 6 to 8 or 9 weeks, should people be making certain portfolio bets right now? And if so, what are they? Can we position a portfolio now to make us money later? And if so, how?
Well, absolutely you can, but I will tell you that for a year or so, maybe longer, I've been calling this a trader's market, and I still think it is a trader's market. So. But there are places for people to make money. There's no doubt about that.
Talk about the politics. It's a presidential year. Certainly already a lot of turmoil on the Republican side as they're trying to find their person to take on President Obama. How does that impact the markets as you look ahead?
I think it's going to be a very, very contentious and nasty campaign. And I think that it's going to take the eye of the general public off of the markets. And even if we do continue to have good news, I think they're going to be watching this. The flip side of that is I do think a lot of people think the Obama administration is anti-business.
Except look at this chart. The Dow under President Obama, and you know what? The NASDAQ and the S&P aren't much worse. Yeah. In fact, if I'm looking at this and I'm basing it solely on my wallet, I'm going to say my 401k came back under this guy. Okay, what do you say?
That's very reasonable. Stocks were getting crushed. We certainly had an aberrational period of time in 2008, early 2009. So it almost had to come back from such an outlier situation. But I do think most people view President Obama as being anti-business, and if he does not win re-election, I think you see a tremendous rally in the market.
Right, and part of the whole business issue is also the unemployment rate. But let's get to picks right now. Do you have any names that you think, as I was asking you earlier, help us position the portfolio? What would you add to that? Do you have a couple of names?
Well, I have a couple. First of all, I like the energy services sector. These are the guys who work for the big energy companies. They service the drilling. There's an explosion of drilling taking place in North America and around the world. A lot of this is due to fracking. The company that I like here is CJES. That's C&J Energy Services, and they're just doing tremendously well, fulfilling this need, and they beat their earnings in the last quarter.
Can they avoid earthquakes in Ohio while they're doing this?
Hopefully.
My God.
And the other company is an old favorite of mine, Celanese Corporation, ticker is CE, big chemical maker, global footprint. They have a new technology where they can make ethanol out of coal and natural gas, and price-wise, it's the equivalent of $60 a barrel oil.
Wait, no corn involved?
No, out of coal and natural gas. And it's proprietary. They're the only ones. And that helps them not just for the obvious reasons, but a lot of the chemicals they make come from ethanol. So it's a major boost for them. They also beat earnings in their last quarter.
Very good. All right, Wayne Kaufman, John Thomas Financial Chief Market Analyst. Wayne, thank you very much.
Thank you so much.